If you're someone who struggles with identifying daily buys or knowing where the marketplace is likely to go next, what if I told you the only thing that you needed when it comes to predicting the markets is fair value gaps? Utilizing fair value gaps in alignment with market structure is one of the easiest ways to frame a daily bias every single day. And in this video, I'm going to teach you how you can utilize market structure as well as fair value gaps to make massive profits. First, we're going to be going over the market maker models, market maker buy to market maker sell models, and how we can utilize them for market structure. And then we're going to be going over fair value gaps extensively. After fair value gaps, we're going to talk about inversion fair value gaps and how you can use them within the markets. And then we're going to utilize a higher time frame influence when it comes to identifying market structure on the higher time frames and why it's very important. And last but not least, we're going to put everything together, backtest with you guys, as well as give you guys a full trade plan, so you not only learn from this video, but you also have the resources needed to backtest it on your own and apply. Before we begin, if you guys want a copy of the free PDF plus the trade plan that I'm about to showcase, you guys can just click the first in the description and join the completely free trading community. So the first thing we're going to be going over is the market maker models, and the market is very simple because it moves in either one or two ways. Either price is in a current market maker buy model, continue to make higher and higher prices, respecting levels of support. Or the market is in what's referred to as a market maker sell model, going lower and lower, showing rejection from levels of resistance. And as easy as it sounds, right, prices creating higher highs, higher lows, or prices creating lower lows and lower highs, many traders still struggle when it comes to identifying the current trend. And one of the easiest ways to identify whether you're in a market maker buy or a sell model that not a lot of people talk about is utilizing fair value gaps, and I'm about to teach you. A fair value gap is very simple. It's a 3 candlestick formation. We have this first candle right here, then we have the second candle in the middle, and then we have this third candle up top. This separation between this third candle's low and then this first candle's high, this separation between the wicks creates what's called an imbalance, and this imbalance is the fair value gap. And we'd anticipate price to come back into this imbalance, to fill it in, to rebalance it, to then go higher. You don't need to know every intricacy within a fair value gap. Just understand that if we're in an uptrend, price should retrace back into that inefficiency to continue going higher, where we can clearly see that price is going lower and lower. And then we create this imbalance right here from this first candle's low to this third candle's high. Price creates this separation, creating the bearish fair value gap. And in this case scenario, we'd anticipate price to come back into this level to find rejection to continue going lower in a market maker sell model. If we're in an uptrend, price should respect bullish fair value gaps. In a downtrend, price should respect bearish fair value gaps. But once we're in a condition to where price disrespects, let's say, a bullish fair value gap, this could mean that the overall trend has been shifted. We can see that price was continuing going higher, creating this bullish fair value gap. And then instead of coming lower into this level to find support and push higher, price instead breaks back below it. This is now referred to as an inversion fair value gap, where the overall structure of the market has now inversed, where we were going from higher prices in one direction to now we're going to lower prices in another direction. Utilizing this inversion fair value gap will give us a bird's eye view of what is the current market condition. Because if the market was truly bullish and the market was continuing to go higher, price should have found support at this bullish fair value gap. Saying that it did not find support at this bullish fair value gap means that at this upper level, there was likely a reversal. And if the marketplace is going to make an effort to break back below this fair value gap, most likely it's going to continue going back lower. So we can see price breaks back below that fair value gap. We get this retracement right here before the market ultimately continues to go lower. Same thing with a bearish fair value gap. We can see price was going lower and lower, creating this bearish fair value gap. And as we can see, instead of finding resistance here, price breaks back above that bearish fair value gap, meaning at these lows, price likely found a level of support where it could not continue going lower. And once price breaks back above this bearish fair value gap right here, this could mean that the underlying market structure within the markets has shifted from lower to now higher prices. And this bearish fair value gap, which was once a level of resistance, now that price has broken above it, it can be used as support, just like so, to reach back above higher prices. And this is where we get into the higher time frame influence, right? If price is respecting daily, 4-hour or 1-hour bullish fair value gaps, we're likely in a market maker buy model. If price is respecting bearish fair value gaps, likely price is a market maker sell model. If bullish fair value gaps are then disrespected, price is bearish. If bearish fair value gaps is being disrespected, then price is bullish. Meaning that if you want to identify the current trend that you're in, pay attention to the fair value gaps on the higher time frames, like the daily fair value gaps, the 4-hour fair value gaps, or the 1 hour. The reason why we utilize the higher time frames is because the higher time frames gives us the most significant. If you look at the 1 minute time frame, there's a new fair value gaps that's formed, there's a new fair value gaps that broken. Since it happens so often on the lower time frames, the significance of it is a lot less compared to a higher time frame. So if price were to come down into this fair value gap here to find support on the higher time frames, the significance of it is a lot more, which as we can see here, we were seeing higher and higher prices. Price came down into this fair value gap right here, and then it gave this rejection from it. This is a very good signature that shows us that once price tapped into this level, buyers started stepping in, and then price rejected from it. And off of this next candlestick, price came back into that fair value gap once again to find support to target back above these highs. This was a good bullish fair value gap, and price was in a market maker buy model. So once price came down into this fair value gap, and then you started seeing price support it and then leave it, which later on in the examples we'll talk about top-down analysis and how to frame an entry, this would be a very good setup to reaching back above these highs. And then as we can see here, after reaching back above these highs, taking out this prior high, we can see price came back lower, and then we broke back below this bullish fair value gap. The fact that we broke back below this bullish fair value gap here means that this is now an inversion, meaning that the overall trend of the market has shifted from higher to now lower prices. Instead of anticipating a continuation back higher, I would anticipate a reversal back lower. And obviously we can identify these lows here as a pool of liquidity. When the marketplace is in a downtrend, previous lows inside the marketplace are referred to as liquidity. When the market was in an uptrend, previous highs within the marketplace was referred to as liquidity. Understanding where you are in the market structure is where you should be targeting. Since we're going lower, we're going to be targeting back below these old lows, and we're going to be utilizing this bearish fair value gap right here as our frame of entry. As we can see, price came back within this bearish fair value gap right here to find resistance to go lower to take out those lows. Now that we've taken out these lower levels here, it's very important to be cautious, because once price takes out a level of liquidity, because the market goes from liquidity pool to liquidity pool, we came higher to take out these highs, and then we saw this reversal to go lower. Once price takes out these lows, the chances of price reversing then becomes higher probability, and we can identify this bearish fair value gap right here, right? I would not immediately take a short within this bearish fair value gap. And the reason why I wouldn't take a short inside this bearish fair value gap is because we've just taken out liquidity. So the chances of price inversing this fair value gap is higher probability, which as we can see, price breaks back above this bearish fair value gap and inverses it. So if you're ever going to utilize a fair value gap trade, make sure that price has not swept a level of liquidity prior to it, which in this case scenario, when price came back into this bearish fair value gap, the liquidity pools were back at these lows. I'm not going to immediately take a short within this bearish fair value gap. Instead, I'm going to be patient and see how does this candlestick close. Seeing how the candlestick closes above the bearish fair value gap, that means the overall structure has went from lower to now higher prices. After we had this liquidity sweep, this would validate as our market structure shift, and we can see this candlestick comes back within this fair value gap right here to find support to go higher. Paying attention to whether the price is respecting these bearish or bullish fair value gaps on a higher time frames is very, very important when it comes to mastering market structure and knowing where the market is going to go next. If we're in a downtrend, price is going to target back below these lows. If we're in an uptrend, price is likely going to target back above these highs. If you guys want access to today's PDF plus the complete trading plan, I will be putting it inside of the PDF section inside this free Discord community. In this free Discord community, we do also have a completely free 2-hour course as well as additional trading models to help make you a better trader. If you guys do want to live trade with me and my brother Spec Trades every single morning, as well as 100+ hours worth of trading education, models, trade breakdowns, and much more as well as the chance to ask us any questions, analysis, or anything that you need help with, you guys can also click the first link in the description and join the Spark Trading Mentorship. But we only want people inside the Spark University that are serious about becoming better and profitable traders. If you guys get value from these videos and you guys are ready to level up your trading and become much better, then you guys can obviously just click that first link in the description and I'll see you inside. So I'm looking at my first example here on EURUSD on the 1 hour's time frame, and we're going to be trading the New York session. If you guys want to know the different sessions like the Asia session, London, as well as New York, I did put that in the trading plan, so make sure you guys grab that copy. During the New York session here, 30 minutes prior to it, you guys want to create what's called a daily bias. Daily bias is very simple. It's identifying where have we been, where are we currently at, and where do we anticipate price to go next. You can see that we've came lower to sweep these Asia session lows. At this prior area of liquidity right here, price came lower to take it out. After price had taken out this level of liquidity, which was these prior lows, price then saw this immediate reaction to the upside. This is a very good signature that we want to look for inside the marketplace that indicates to us that price is likely in an uptrend. We can see here that we did have this prior fair value gap right here, which we can clearly see price did come back down into to find support to push higher, which we can see here that price had came back down into, and so far price has not made an effort to break back below this fair value gap level, meaning that the overall trend of the marketplace is likely to continue going higher. Now that we understand where have we been, basically we've been in an uptrend respecting bullish fair value gaps. Now it's identifying where are we currently at. So essentially, we can see here that prior to this liquidity sweep and just before the New York session opens up, we're currently at these highs right here. And we can identify this bullish fair value gap right here as a potential level of support. We can already see that price had came back down into this fair value gap to find support to push higher. So most likely, if price were to come back down into this fair value gap, we could expect the same movements. But we have to pay attention to our third phase, which is where are we going next, or referred to as our draw on liquidity. You can see here that price had this overall expansion to the upside, and then price created these previous highs. These highs right here is referred to as our liquidity pools. So it's very important, right? From the thousands upon thousands of trades that I've taken within fair value gaps, it's very important that if you're ever going to take a fair value gap trade, you have to have a draw on liquidity, meaning that if price were to come higher to take out this previous high, the chances of price finding support within this bullish fair value gap is a lot lower probability. And it's a lot lower probability than if price were to come lower into this fair value gap and then come back higher. Within this schematic here, we can identify this fair value gap. Clear as day, we can identify this level of liquidity above us as our liquidity pool, right? It is very important whenever you're trading fair value gaps, I should not sweep a level of liquidity prior to tapping into it. That's a very important rule that not a lot of people talk about that I'm going to tell you guys today. Well, basically for this morning session, I want to see price come lower into this fair value gap first before coming back into these highs. Where have we been? We've currently been in a uptrend, had this expansion to the upside, creating this bullish fair value gap. Price found support inside this bullish fair value gap to anticipate higher prices. Where are we currently at? Just before the New York session opens up, we want to see price come back within this bullish fair value gap to continue the structure going higher. And where are we currently going next? Currently, we're coming back into these prior highs here as a liquidity pool, keeping things very, very simple. Once you've identified your overall structure, in this case scenario, I use the 1 hour time frames. A lot of my analysis is based upon the 1 hour time frames, but if I sometimes see a fair value gap on the 4 hour or the day time frames, I may look at that analysis, but a majority of your analysis should be made on the 1 hours just because it's the most consistent and it's not too high of a time frame like the daily, but it's not too low of a time frame like the M5. It's right there in the middle. After I've identified where have we been, we're currently at, and where we're going next, I'm going to go down to a lower time frames, specifically the 15 minutes, and I want to see price come down into this fair value gap level to potentially find support to push higher. So we're currently on the 15 minutes here. We can already identify this liquidity sweep, and then we've already identified we had this break of structure to the upside. Then we had that 1 hour fair value gap, and inside of this 1 hour fair value gap, we have this 15-minute fair value gap. This is what's called a nested fair value gap. This is where we have a higher time frame fair value gap within a lower time frame fair value gap. This green box obviously represents that 1 hour time frame, and I'm going to mark this box out here blue as our 15-minute fair value gap. This is a strong level of support that price is going to come down into, find volatility it needs to reach back above these highs. When you create your overall daily bias or the structure on the higher time frames, it's very important that when you're coming into trading, you stick to that higher time frame bias, right? Too many traders, they would create a higher time frame bias, bullish, right, based upon, right, whatever confirmations they have, and then when they come down to lower time frames, they allow the lower time frame movements to sway their higher time frame analysis, right? If I say that I'm currently bullish, then I have to remain in that bullish state. I cannot change my mindset to now, oh, I'm gonna be bearish or anything like that. When you guys create a daily bias or create analysis, it's very important that you guys practice discipline and stay within that bias. You get faked out a lot less and you only get the highest probability opportunities. We can see price came close to take out that high, but it failed, which is very, very good. We don't want to see price take out that high. We can see price came down into that fair value gap there on the 1 hour. Not necessarily the 15-minute fair value gap here. So we're going to be a little bit more patient, wait for price to come down there, and then boom. Price comes down into this 15-minute fair value gap right here. Once price comes down into this lower time frame fair value gap right here, which is the 15 minutes, I can then frame my long entry. And specifically, you want to have your stop loss back below the low of the fair value gap. So the fair value gap is a 3 candlestick formation. So we have this first candlestick right here, this second candlestick right here, and then this third candlestick right here. I'm gonna put my stop loss here just back below the bodies of that first 15-minute candlestick, just so I have a good enough risk to reward to aim for at least a 2-to-1 R. And personally, one way that I trade is I scale in, meaning if I take this initial entry right here and then price finds support to push higher, I can add additional entries and I can adjust my stop loss. It's just one way that I trade specifically to help make my risk management a lot better. So if I can see some type of rejection from this level, meaning if price comes down here and then immediately starts pushing higher, or we see some type of break of structure, I can obviously scale into my position and I can establish this as a low and put my stop loss back below this low. In this case scenario, when I see price starting to break away, I can adjust my stop loss. So instead of having a much wider stop loss here, I can adjust my stop loss just back below the low of this fair value gap. Price breaks back above this last down close candle. We can see the opening price of this last down close candle. As price breaks back above this level here, right, with strong displacement indicating that price has found support here, I can obviously scale in. So instead of making a 2-to-1 R on this trade, I now have the potential to make over a 3-to-1 R. Obviously, the first trade I ever take has a wider stop loss to take into account any added volatility, or if price were to come down here, I would be safe. Once we start seeing bullish engulfing candlesticks or price going in my favor, then obviously I could scale into my position. Or if you're not someone who scales in, you could just adjust your stop loss back below this low. Or if you're someone who puts your trades back at break even, this would also be viable as well. You scale into your trades, whether you trail your stop loss or whether you put it at break even. These are very good risk management systems to put in place to become a better trader. To be a good trader, you have to utilize every aspect in trading. The strategy, to your analysis, to your risk management, as well as proper psychology. These are the things that we teach inside Smart Trading University to equip every student with all the necessary aspects that they need to become a profitable trader. Not just the strategy, but we teach a lot more. Price consolidates for a little bit, but as we can see, price does eventually go into our favor, just like so, reaching back above those highs, continuing the overall trend higher and higher. Perfect. These previous highs, as well as price does end up coming back higher to take out these original highs as well. So we're looking at another example here on GBPUSD on the 1-hour time frame during the London session. So just like we mentioned 30 minutes prior to the London session opening up, we want to create a daily bias. Where have we been? Where are we currently at, and where can we anticipate the marketplace to go next? So where have we currently been? So we can clearly see here that during the prior day, price had came higher to take out this level of liquidity, and then we saw this break lower, which we can see we had this bullish fair value gap. Price broke back below this bullish fair value gap right here with a strong body displacement. This is a good indication that price is likely in a reversal. So just before we start trading, we have the overall narrative. Price is likely to go lower. That's it, right? In just 2 seconds, we came into a market. We see where have we been. Price came lower, broke back below this bullish fair value gap. It inversed it, came back into it, and then it came lower. In just 2 seconds, we've already created a daily bias for where the marketplace is going to go next. As well as we did have this bullish fair value gap as well, which as we can see, we inversed during the Asia session. price had came down into it to find support during the prior day, which it did, and then we saw this push higher. But today, coming into the Asia session, price broke back through it. And obviously, where is our pool of liquidity? Well, our pool of liquidity is this previous low. We've been in an overall downtrend because price is disrespecting bullish fair value gaps and it's going lower. Where are we currently at? Well, right now, actually, we're inside of a bearish fair value gap. As you can see, just before the Asia session opens up, we're inside of this bearish fair value gap. So essentially, we've been going lower. We're inside of a bearish fair value gap. And where are we going next? We're going back below these lows. Daily bias is easy as 1, 2, 3, right? It does not need to be as complicated as many people think. The last thing of daily bias that we need is just time. And time is basically just the London session or the New York session. Now that I created my bias of where the marketplace is going to go next, now that I created my daily bias of where the marketplace is going to go next, all I have to do is wait for the London session to open up, and my overall bias is lower prices. Meaning that if the London session were to open up and go higher, I don't have a trade idea because my bias was lower prices. Before you start trading your specific time, you create a routine of what you anticipate the day to happen. So once the London session does open up, I don't get confused on the lower time frames. Now that I know that we're inside of a bearish fair value gap here, once the London session opens up, I can just immediately take a short, reaching back below lower prices. A 15 minutes time frame here, and on the 15 minutes time frame, we can identify right here this bearish little fair value gap right here, 15-minute bearish fair value gap within that 1 hour fair value gap. Like I mentioned, I want to see price come back into this 15-minute bearish fair value gap to find resistance to go lower, targeting these lows. So let's see how the London session opens up. So we can see price came back into the high end of that fair value gap, and then we saw this drop lower. In this case scenario, I would like to frame my short entry. And just like I mentioned, when we have fair value gaps, we want to place our stop loss below the low of the fair value gap or the high of the fair value gap. Since this is a bearish fair value gap, we have this first candle, the second candle, then this third candle. I'm going to place my stop loss back above the first candle here, which is the high of that fair value gap. And if I can target back below these lows, this would yield me over a 2.6R. This is a very good setup anticipating back lower prices. Let's see what happens. We can see price go lower. And just like that, price comes lower, takes out that liquidity pool very, very swiftly. On the higher time frames, we've identified where we're at. Price was inversing bullish fair value gaps. So obviously we were bearish. We're inside of a 1 hour bearish fair value gap, and we're anticipating price to come back below these lower levels. We went down to 15 minutes. We waited for the London session to open up. Price came back within a 15-minute bearish fair value gap. We were able to frame a short, targeting back lower prices. All we did throughout this entire video was just use fair value gaps to tell us where the marketplace was going to go next. Daily buys can be very, very simple once you just focus on 1 or 2 things. So that's going to be it for the video. I hope you guys got a lot of value. And just like I mentioned, if you guys do want to live trade with me and my brother Spec Trades, as well as get access to 100+ hours worth of additional education just like this to help you master trading, you guys can click that first in the description and join the Spark Trading Mentorship. But if you're someone who wants one-on-one help, me and my brother to privately coach you and navigate you through trading and help you become a full-time trader within your first year, we created the Spark Trading University. So if you're looking for more one-on-one mentorship, one-on-one help, you guys can click the second link in the description and join the Spark Trading University. But before you guys leave, make sure you guys click that like button, subscribe if you're new to my channel. I'm your new mentor, Arkhamtrades. Be safe.